We will discuss the crypto winter in this video and how, in the words of a VC firm, it will be a warm winter. Before you watch this video, be sure to like it and follow our channel for future updates. The popular HBO series Game of Thrones is most likely where the term crypto winter originated. Winter is coming served as the House of the Stark's motto and the television series. It was interpreted as a sign that Westeros could face protracted conflict at any time. Similar to this, the crypto market may be in for a protracted period of difficulty. You must maintain vigilance during this trying time and be ready for sudden mayhem to erupt in the market. In a more literal sense, the term crypto winter refers to a period of time when prices decline and stay low. Analysts think that earlier in 2022, the foundations for the impending crypto winter were laid. According to Igor Zakharov, CEO of DBX Digital Ecosystem, the cryptocurrency market was already suffering the effects of the world events, especially the Russian-Ukraine crisis, that produced volatility in the global banking. According to Zakharov, the United States, which dominates the cryptocurrency market, has seen rising interest rates as a result of the excessive inflation. Crypto winter had already started by the time Terra USD and Luna failed, and started a domino effect in the crypto world, he claims. The crypto market has substantially declined since November 2021, going from $3 trillion to less than $1 trillion as of this writing, a 60% decline. A crypto winter has before descended over the market. From January 2018 through December 2020, there was a previous crypto winter. The phrase was presumably first used in 2018 when other cryptocurrencies, including Ethereum and Litecoin (LTC), as well as Bitcoin, saw significant price drops. From that experience, we know that the crypto winter resembles a traditional bear market, and that the outcomes aren't all that unlike from those of the bear markets in other asset classes. Long-term crypto winters eliminate inexperienced startups and provide leading enterprises a chance to develop and validate their offerings. According to Jake Weiner, founder and CEO of The Uncommon, we witnessed a lot of the new businesses around the sector over the previous year, and many of them will fail. According to Weiner, more cryptocurrency companies will slash spending as it becomes harder to compete for venture capitalist money. Unfortunately, some will have to fire employees. Some outstanding companies will also suffer if the market is in contraction for a long enough time, he claims. The good news for those businesses is that many crypto venture capitalists have already accumulated war chests that they will continue to deploy. In contrast to the previous crypto winters, there was a period of the phenomenal growth that lasted for the majority of the 2021 after the crypto winter thawed in the late 2020. According to analysts, the start of a crypto winter typically coincides with a sharp sell-off from a record high in the price of the Bitcoin. In November 2021, BTC reached a 52-week high of $68,990 before beginning a protracted decline. Bitcoin has suffered significant losses over the past 7 months, falling by roughly 70% between November 2021 and mid-June. The Celsius scandal has coincided with the most recent leg down from its 52-week low. The original cryptocurrency has gained some ground and is currently trading at about $22,600. As of this writing, the second largest cryptocurrency, Ethereum, has decreased by 74% from its peak in November. According to experts, the June downturn is getting worse because prospects for further Federal Reserve monetary policy tightening and institutional investors are the ones driving sales. Anyone who bought Bitcoin in the last year would have lost money because the value of the original cryptocurrency has fallen. Before the previous crypto winter, the price of the Bitcoin rose to a peak of about $19,500 in 2017 before plummeting to less than $3,300 in 2018, a loss of at least 83%. There will be a crypto winter, but it will be a warm winter, predicts one bull. Even if the price of the Bitcoin has dropped by more than 50% from all-time high, Raise Capital managing partner Ajit Young insisted that there is so much more than that. She stated last week on the CNBC Street Signs Asia that Bitcoin is a long-term bet and that the warm winter will essentially dry out everyone who truly wants to be there for the short-term benefit. The phrase crypto winter describes a protracted period of the low market prices for digital coins. Since the peak of a significant surge in the 2021, cryptocurrencies have lost around $1.9 trillion in value. The largest digital currency in the world, Bitcoin, is currently 68% below its record high, which was reached in November at just under $69,000. Young stated that she is still optimistic about digital tokens in the long run, since crypto is actually about Web3. The term Web3 has gained traction in the cryptocurrency community. The next generation of the internet, according to proponents, is decentralized and not controlled by a small number of the powerful technology companies. Cryptocurrency and blockchain technology, according to proponents, may play a significant role in that. For instance, a Web3 service might function on a specific blockchain like Ethereum or Solana. To access a certain service or even to own stock in an app or firm, users might need to own the tokens connected to those blockchains. According to Young, a whole generation of internet users truly believe that the internet should be owned by us and that you cannot commercialize my data anymore. The ownership of Ethereum or Solana is basically the user owning that piece of token, which is merely a portion of that internet, which is why there is such a push with the cryptocurrency. Young predicted a warm winter for the cryptocurrency market, but the problems the sector is currently facing are unprecedented. The abrupt collapse of an algorithmic stablecoin dubbed Terra USD, which caused its sister token Luna to lose all of its value, served as the catalyst for roughly $2 trillion decline in the value of the cryptocurrencies. Terra USD was heavily exposed by a number of the cryptocurrency businesses, notably the now defunct hedge fund Three Arrows Capital. In the meantime, lending companies like Celsius that made hazardous trading wagers experienced liquidity problems and eventually filed for bankruptcy. One of the detractors of the term warm winter is James Butterfield, the head of the research at the CoinShares. He referred to the collapse of the Three Arrows and the sharp decline in the Bitcoin prices as evidence that the crypto winter has been brutal. Bitcoin value have declined by 74% peak to trough at one time, Butterfield wrote in an email to the CNBC on Monday. This roughly approaches the 83% decline experienced in 2018, and it must be regarded in the perspective that the market is substantially bigger and has a much broader investor base currently than it had back then. According to Yuya Hasegawa, a crypto market analyst at the Japanese crypto exchange Bitbank, the biggest obstacle facing cryptocurrency at the moment is the uncertainty surrounding the Fed's monetary policy and if the central bank will decrease the pace of the interest rate increases. Markets are waiting for the Federal Reserve Chair, Jerome Powell's address at the Jackson Hole Conference on Friday regarding the Fed's upcoming policy decision. According to the Hasegawa, any halt in the rate hikes could be advantageous for the cryptocurrency markets. My midterm prognosis is somewhat optimistic because I believe the Fed will eventually have to confront and address certain indications of an economic slowdown, according to Hasegawa. The economic outlook is still mixed, Butterfield noted, making it difficult to forecast the Fed. The price of the Bitcoin may benefit greatly from a shift towards becoming less pessimistic. This bear market was started in December, January by a hawkish Fed policy. A dovish approach could cause it to break out of its 20,000 to 25,000 trading range, said he. The token that's native to the Ethereum blockchain is Ether, the second largest cryptocurrency in the world after the Bitcoin. The native coin of Solana, a public blockchain that facilitates decentralized financial applications that seek to replicate established financial systems like banks and exchanges, is called SOL. Young from Raise Capital responded that the two cryptocurrencies are extremely different when asked if Ethereum has more solid fundamentals than Bitcoin. She emphasized that Bitcoin is a digital gold, comparing it to the decentralized cloud services like Ethereum and Solana, where applications are developed on the blockchain network but are managed by many individuals. Blockchains like Ethereum and Solana advertise themselves as platforms for which programmers can build applications. Ethereum and Solana are similar to Bitcoin. However, Bitcoin was designed to be a payment service. Since both digital coins bottomed out in June as a result of a hotly anticipated Ethereum network upgrade, Ether has so far greatly outperformed Bitcoin. What are your thoughts on this video? Please share your thoughts in the section below. Do not forget to click the subscribe option if you want to hear from us again.